following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Maya Angelou. I believe the most important thing beyond discipline and creativity is daring to dare. Oh, yeah. Market-wise, let's take a look at it out here. We have the Dow up 26. NASDAQ, where is she? NASDAQ is up 11. S&Ps are up 450. And if we talk about the S&Ps for a second, as Tiger J is staying in the den right now, there's no doubt. I'm going to bring this up quickly so you can see how this is shaking out, folks, because this number that we're at, before I go through the whole market, this number that we're at right now, bottom line, this is where the seller is. 2081. We're at 2080.50, and we're at that level, and guess what? We have no buyers here, okay? Bottom line is that if you happen to trade the Nadex product, bottom line is that you get defined risk out here if you bring that product up. If you don't bring it, if you don't trade it, folks, this is a great time to bring it up and just they'll put $25,000 into your account. You can trade it with funny money. Bottom line, sell the 2080 that expires at 415, because the bottom line is that your risk out there is it's a 5-to-1 risk. That's the bottom line, and that's a spread. That is not the actual binary. That's a spread. So bottom line is that your risk is you're not even risking the $19. So anyway, if we take a look at this, what you're looking at is this. So I'm going to do the S&P first, and what we have with the S&P is this. Each and every time, this is the fourth day in a row, folks, that this number gets sold, and it gets sold dramatically. So we'll see how this shakes out in the next hour. What I expect you're going to see again is that you're going to see that sell come in. We're going to end up flat. We're going to end up slightly lower, because what we do have is that at 11:20 this morning, you get a high volume spike. Bottom line, that's at 2066, and you know what? 2066 is game again. So bottom line, when we talk about risk, when we talk about reward, this is a classic setup, and I love that it happens as soon as I start the program. Okay, so let's walk through the rest of the market. If I go to the SPY, what you have with the SPY is this. The SPY. The SPY is set up right now. The SPY is trading out at a price point of 208.57. That number, that 208.57, bottom line, has no juice. We've done 61 million shares. You're going into 114 million, and you're going into 159 million. It's pretty intense, man. I mean, when you're talking about that type of number and you fail this many times, what happens is this. The market, well, life is all about energy. The market's certainly all about energy, and it's been expending a huge amount of energy to get up and over this 2082 area. So that's the bearish part. The bearish part is that it's failed 5 days in a row. This is, well, actually 7 days. Well, 4 days in a row, it's failed 7 days. That's your bearish part. The bullish part for you bulls out here would go like this, that you're hanging at the top of not the market, but you're at these swing points. The longer you stay at the top of a swing point, well, guess what? You can basically blow by it. So we'll see where this baby does shake out. But that's the skinny on that right now. NASDAQ, the NDX 100. What do we have at the NDX 100? NDX 100, if we use the 3 Qs, we're trading at 107.04, and the swing that it's going after was the 106.82. Now, it's not going to have the volume. It's going to do about 70% of the volume. So the real key is going to be, does it hang over this swing point from the 30th, which is 106.82. We'll see how that works going into the close. If it does hang over there, if you close over there, guess what? That would be saying that 108.20, which is the downdraft, would be game to get tested. Now, that downdraft had 41 million shares traded. So you're talking about big numbers. No one's in the store, and they're buying the product. And what happens with that, folks, you can always buy anything, try to sell it back. Bottom line, you're not going to get what you want when you're selling it back. IWM, the small caps. What do we have with the small caps? Inside the small caps, this is what you have. We're trading right now at 124.85. You've done 18 million shares. Now, this one gets intriguing because it's failing on price. The volume's not bad in correlation of the last time it was up here, I mean April 6th. However, as we came downtown on the 25th, it's not even close. It's 18 million shares right now going against 30 million. Gold contract. What do we have with gold? Gold contract is trading out at 11.93. And what you have with gold, folks, is this. You're back down. What we've done today, we've done 102,000 contracts. That's backing into 150,000. So bottom line, now price-wise, you are into that bar in a big way. The top of that bar, where the strength was on April 1st, was the top was 1208, and we're at 1193. The bottom is 1180. What that sets up, 1180's game. That's what that sets up. But you're pulling back. You're doing it with lighter volume. What that sets up is you're building cause for higher price. If you go to the GLD and you want to see the correlation inside the Street Tracks Trust, the correlation is really sweet. In fact, inside the Street Track Trust, it's really intense because that's pulling back with 3 million shares versus 8 million, which is going into, and 12 million, which is going into. There's no sellers inside that GLD. Silver. We take a look at the silver contract. What we have with silver. Silver is trading out at $16.17. Silver has come down to the bottom. And this is where it's really wild about the whole shakeout inside the metals. It seems that silver took off from the bottom first, then couldn't handle it. And the way that silver actually took off, silver absolutely was saying that, hey, listen, it wants to trade up to 1793. Now what you have, silver pull back. You had 42,000 contracts today going into 60. So that's still not bad, okay? But silver is so volatile, it's unbelievable. So 1608. It hit 1610 today. 1608 more than likely is going to get tested. I expect more than likely you're going to see that test come in tomorrow. Now, with the aspect of how, this is going to be really interesting watching this because the S&Ps just took out the 2082. We'll go right back to that too. We go back to the gold contract for a second. Gold's down $9, but with gold being down $9, we go over to the King Dollar. Now, King Dollar, folks, is up 1,200 ticks today. And what's pretty cool about this is that with gold only being down $9 and King Dollar being up 1,200 ticks, that's saying that, guess what? Bottom line is that, yeah, King Dollar, it looks like it's going to go test the highs again because we've done 50,000 contracts. You're at 99.41. That's saying, hey, game is 100.78. But it's not doing a thing to the gold contract. Now, let's go over to the S&Ps again, because when we start in that S&Ps, we're talking about that 82 mark. We take this, we put this back on the 10-minute, and ESM5. So what do you have here? We have, it spikes higher. You're over the 82. Right now, you're at 85. We have, let me see on this one. That's going to be interesting because you get 5 more minutes on this bar. The bar itself, folks, has to do 84,000 contracts. Right now, thus far, we've done 37. So we'll see whether that can handle it and/or this is what ends up happening at highs and at lows too. The final thrust is normally exactly that. It's a spike higher. We'll see whether it can hold price. If it can hold price, bottom line, you can go higher. It doesn't hold price in the next 5 minutes. Well, I say 5 minutes. The actual time would be 15:20. You hold price at 15.20. That can finish up. You don't hold price at 15.20. What that would mean specifically at 15.20 hours, you'd be under the 81.50 again. And right now you're at 84.70. Some of the high volume stocks in this low volume market, we have Bank of America is up 13 cents. You get let's see. Rite Aid is down 41 cents. You got EMC down 23. Pier 1 is up $1.20. Inside the Dow Industrials, what we have, the Caterpillar is up 36. You got Honeywell up 39. Big Blue is up 45. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. Stay right there. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 59, Nasdaq's up 21, S&Ps are up 8. And now let's go over to our man, Mr. Andy Heck. And don't forget, folks, every trading day at TFNN, we do live programming, 8 o'clock in the morning to 6 in the evening. You can get all that programming right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, folks, just go to TFNN.com. On the right-hand side, you'll see a little box that has just hit mobile devices. You hit that device, it'll bring it right up. You'll get Tiger TV as well as the audio and the video. Andy also has a great newsletter. It's the Technomental Commodity Report. You can get that newsletter by coming over to our website at TFNN and go into newsletters, trading newsletters. You can test drive it 1 month absolutely free. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. You having a good day?
Yeah, I'm good. Nice shirt. I like that shirt. Is that your sailing shirt?
That's my sailing shirt, man. Summer's here. Summer's here in Florida, man.
It's a beautiful thing. It's still a little chilly here, but I kind of like it before, the 120 degrees descends in a few months.
Yeah, you got to grab every one of those decent days before 120. No doubt.
Absolutely, absolutely. So, hey, this dollar, man, this thing is for real. I think this move could take us to parity against the euro.
You think so?
I think it's got a lot of juice. I think what's going on with Greece, with what's going on in Europe, I think that it's more that the euro is going to be weak than the dollar's so strong. But, hey, very convincing move today.
Well, that wouldn't matter, right? You know what's interesting about, it's, and I know you're not saying it that way, but it cracks me up when the aspect, people say, well, it's the best and the worst thing. It really doesn't matter. All that matters is, hey, how much does it buy? That's right. All money's about, folks. Don't take the bit. Well, hey, that's the best and the worst backyard. Well, guess what? That's all that matters.
It's all relative value.
Yeah.
And, what's telling you that Europe is really weak is the fact that the dollar is so strong. Gold is only down $10 here, which means that gold is kind of up over the last couple of sessions in euro terms.
Hey, listen, I like gold. I know.
I'm in the other. I have to tell you, I'm in the other camp here. I think tomorrow's a really dangerous day for gold.
Yeah.
Tomorrow is crazy Friday.
Yeah.
I didn't like what silver did today. I just don't like what platinum's doing. So it's got me a little worried about the gold market right here.
Right. Well,
I think tomorrow's a big day.
There's no doubt. What happens going into Friday? Fridays in the gold market, folks, can be vicious. There's no doubt.
Absolutely.
But when you look at it, well, hey, we'll see where it shakes out.
We'll see where it shakes out. Yeah, oil, interesting. I'll tell you, I've been saying for like a month and a half now, $50 is this pivot point. It's so funny, Tom. When I watch like CNBC or read the newspaper, read Bloomberg, read all the articles out there, when it's above 50, the $60 and $70 a barrel crowd come out of the woodwork.
Okay.
When it's below 50, the $30 and $40 crowd come out of the woodwork. Meanwhile, it ain't going nowhere.
Yeah. That's interesting.
It's interesting.
No, it is. It absolutely is. In fact, when I was just down, I was just checking out a couple of the units that we had in St. Pete. I got to pull this up for a second because it was hilarious. I heard someone that was on, let's see, September. Oh, so there's December. Okay. So this woman was just on saying that, yeah, I was wrong in December. We were buying it in December. So that was 76 they were buying it. I said, okay. I just forgot what it was. You know what I mean? Yeah. But she was on now saying, absolutely, it's the bottom. We'll find out.
It's always about, but I think there's too many things pulling oil in two directions. Let's talk about a couple of these things. First, Iran and Yemen. So you have Iran. They signed it. They did this deal today. Of course, the Iranians are saying that they're not going to sign on the dotted line unless all the sanctions are lifted immediately. So there's, until this thing is signed and delivered, nothing is for sure.
Sure.
But if they do lift sanctions, that means more Iranian crude on the market. That's not positive for Brent, all right? That's why the Brent versus TI spread has narrowed. However, on the other side, the war in Yemen is bullish because that's a major choke point in the point where 4 million barrels per day flow through the Gulf into the Red Sea.
Yeah.
And also the fact that, hey, a war on Saudi's border is certainly not bearish for oil. That's for sure. So the other thing, what was bullish a couple of weeks ago, the fact that crack spreads was so strong, they have actually weakened. You've had the gasoline crack move from over $30 down to $23. That's a big move.
Sure.
And the heating oil crack move from $31 down to $22. Big moves in these cracks. So that's a little weak. But rig counts keep dropping. That's bullish. So you have bullish and bearish factors pulling on this crude oil, pulling it in two directions. And that's why I think $50 is kind of the fair market value. We'll trade above, we'll trade below. And I think that the shocks remain on the upside for crude because the market is so short. Overall, the professional market is focused and honed in on these big supplies, which, hey, granted, there are big supplies.
Yeah, I guess, there's always going to be a wild card. The real, it's like, okay, is there so much commotion in the world that less oil is going to be used, period, because there's so many problems in the world? That's a big number.
That's the demand side argument.
Right.
But also, if oil price is low, bearish for other commodity prices because just the cost of goods sold of producing these commodities has dropped, and that's why I'm particularly concerned about base metals here.
Yeah.
Energy prices are lower, which means cost of production is lower. Cost of production is lower and demand isn't great. That means that there's more downside. So, copper, I'm still looking for to test the recent lows and maybe make a lower low. All the base metals were down about 7.5% last quarter. They haven't really picked up. Lead picked up a little bit, but the rest of them are kind of weak. Just commodity prices in general. It's even weighing on the grains. Soybeans are down, corn is down, wheat is down. The stronger dollar does weigh, particularly on the commodities that we produce in this country.
Oh, and listen, there's no doubt, because that relative is more money, period. I mean,
right.
Even though the commodity is down, they're getting paid in dollars, folks. It's worth more money, period. Do you know what I mean?
And when you look at something like sugar, hey, the Brazilian real price of sugar, when the dollar gets so strong, goes up. They sell more sugar into the market, and the sugar price goes down. So, and we can look at this across the board for most commodities, even those not produced here in the United States. So, all in all, hey, today was a big move. 1.2 big figures in the June dollar index is a big move.
Oh, it's the second time. It moved 1,200 ticks 2 days ago. And yesterday was flat, but another 1,200 today. Yeah, there's...
The other interesting thing that I'm seeing, Tom, is these. Did you look over these Fed minutes that they released yesterday?
Yes.
Very interesting. A lot of conjecture there. You have 1/3 of the Fed wants to wait till 2016 to raise rates.
Yep.
Another third wants to do it right away, and another third wants to wait till September. So we don't really know which way the Fed is going here. So that is all. And I have to tell you, if they do raise rates in June, that will turbocharge the dollar. It's just an interest rate game at that point.
Well, there's no doubt, man. And hey, we'll find out. But when you look at these rates going across the world, they just keep getting less expensive.
Oh, absolutely. And you know what? Hey, currencies are going to be volatile. And I saw today that Everbank has a new product. Did you see that?
I have it right in front of me. You stay right there. We'll talk about it.
Because
I was talking with Chris about this. This is on the air. This was pretty cool.
Yeah, it's a great product.
Andy's going to be coming right back with us, folks. We have the Dow Industrials up 75, Nasdaq's up 23, S&Ps are up 10. It's at 2085.75. We're going to be right back, folks.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 51, Nasdaq's up 18, S&Ps are up 7. We're talking with our man, Mr. Andy Hecht. And, folks, as you're at TFNN, come over to TFNN. On the right-hand side, you're going to see the Everbank banner. And as you hit that banner, you're going to go under banking. And then you want to look at Market Safe CD. Andy and I are going to talk about this right now. When I had Chris on, who's the president of Everbank World Markets, Tuesday, we were talking about this, Andy, and this is pretty cool. So this just got launched today, folks, okay? And you know what's so cool about this, Andy, when we're talking with Chris, but I have it in front of me, is this. So if you're in the CD market, what ends up happening, folks, of course, CDs aren't paying a lot of money. Nothing's paying a lot of money, right? And they call it a market-safe product because you cannot lose your principal. But in this particular case, what you can do, it's a 5-year product. You have to fund it by May 7th of this year. And what you're actually funding is that you're funding 5 separate, I guess six separate currencies. You got the Brazil real, you got the Chinese renminbi, Indian rupee, Indonesia what is the Indonesian riyal? Rupiah. The Mexico peso and the Turkish lira.
It's an amazing product. I'll tell you why. Listen, I am very bullish on the dollar here, okay? But my time horizon, Tom, is like, 3 months, 6 months. This 5-year product could not come at a better time to buy a dip in these currencies. And when you invest in this type of CD, you have absolutely no principal risk. That's what I love about it. It's a great, and there's nowhere else you can go for products like this.
Exactly. And I was saying to Chris, right? Now this is where it really gets bizarre, folks. Okay, because if you're in the CD market, that's a great market because you're going to get their money back, which is really important. And it's really cool understanding that you're still going to get your money back, but like, let's say, I don't know, 5-year CD is probably paying what, 1%, 1.5% or something, right?
Right.
So that would mean that, let's say, if it's $100,000, folks, okay, you'll get $1,500 over the course of 5 years, right? I mean, that's what it comes. That's not even that much. It's $750. $750, right?
Each year. If it's what is it? 1.5% for 5 years now?
Oh, so I don't know what it is, but
I think if it was 1%, you'd get $1,000 a year.
Okay, so let's say it's Let's say it's $1,500 a year, whatever. Right. So, that's great because you get money back and you get that. But if you're gonna, you might as well. I mean, if you're gonna do something like that, it's like hold it. In this particular deal, we know that there's volatility inside these currencies. Can certainly go up more than 1.5% against the dollar in the course of each year.
Are you kidding me? The dollar moved 27% in 10 months. They can move. These things can move, and especially these particular. When it comes to Brazil, China, India, Indonesia, Mexico, Turkey, these are very volatile currencies. So, and you are buying a dip with this product. That's why, I'm going to take a look at this because May 7th is right around the corner.
It is.
And you're buying these basically on a huge dip. And listen, we both know these markets are volatile. They move around. Who knows where it'll be a year from now? And you really have no risk.
No, you don't. It's a $1,500 minimum, folks. So if you come over to our website at TFNN, or if you're just in the car, all you have to do is go everbank.com/TFNN. You'll be able to pull them up right there, man.
Yeah, let's talk about that minimum for a minute. When I worked for Solomon and on Wall Street for a couple of other firms,
yes,
there were products like this available to high net worth individuals. Okay. However, the minimum to buy a product like that was often $500,000, $1 million or more. The Everbank makes these products available for as little as $1,500 investment. This is a wonderful retail product that brings the kind of stuff that the Warren Buffetts of this world have available to them, but the rest of us don't. So that's a terrific thing.
Well, what's and Everbank has been a leader in this for a long time, but what is happening and will continue to happen, folks, is that the you always hear all our large banks complaining about everything. That's because they'll take everything and slice it and dice it and blow it up. I mean, that's the reality, right? No, that's what they do, right? I mean, the bottom line, you get Jamie Dimon out there yapping there's going to be another financial crisis. This time it's liquidity in the Treasury market.
Did you read the whole letter?
I didn't read the whole letter, no.
I read it this morning.
Yeah.
And you know what Tom had said to me? If I read between the lines,
yeah,
it was kind of a policy argument to loosen regulation.
Oh, it definitely is. Yeah.
This is his when he stands on his soapbox.
Right.
This is what he talks about. He wants more liquidity. He wants more ability to use his capital and leverage it.
He wants to run. They wants to leverage it. 500 to 1, right?
Exactly. And this is kind of a putting a little fear into the market. Hey,
right.
Listen, is there going to be another blow up? Of course, there's always this is a function of markets. Markets go up and down, and sometimes they tend to go down much quicker than they go up.
Folks, there was I don't know if you caught this, Andy, but I'm sure a lot of you folks might have this morning. This was a trip. There was a guy on CNBC this morning, and he's from a big bank, and RBS, I think, yeah, and he was claiming, this was like hilarious, man. This blew my mind. And Kernan called him on it, and it got kind of messy. But the bottom line, folks, is that this guy was claiming that the market was going to go up for 20 years and that there was never going to be a 20% correction in 20 years. So Joe says to him, are you telling me there's not going to be a 20% correction in 20 years? And he says, yeah. He says, so he says to me, are you serious?
That's crazy.
I know.
That's crazy.
The only reason I'm bringing this up, folks, is that think about something. This guy here is a strategic guy for a major bank. It's like, oh my God, are they that desperate right now to get people's money?
It's unbelievable. I mean, how can you predict the geopolitical landscape for 6 months these days, much less 20 years?
I don't think we've been in this market for a long time. Even from 1981, I remember the Dow at 782. I remember sitting at the water cooler that day saying, man, this thing wants to go. And even from 782 to the first run of, 12,000, there was vicious markets, man. You had 87, you had 94, you had 91.
God.
I mean, it's like, give me a break, man. Even if you get the best bull market in the world, you're going to have vicious times in between that, man.
Absolutely, and the more juice it gets on the upside, the uglier the corrections are. So hey, 20. That's that's kind of a trying to preach to the retail audience, and telling it like it ain't,
Well, the thing that's amazing about that, I'm trying to figure out, is it that psycho out there right now that you can actually say that? Because that's pretty intense, man.
Yeah, it's pretty intense. It really is. I mean, it's like saying that the euro's going to go down forever. The euro's not going to go down forever.
Yeah, nothing does.
Nothing's going to go up forever. Nothing's going to go down forever. Hey, chances are, listen, over our lifetime, we've seen the stock market do very well. It has improved, no question. However, there are going to be very choppy sessions in all these markets.
Yeah. Hey, did you see that article about the and what this is about? This is about that oil would be, near the bottom. Is that the last time that oil folks got crashed when it went to $9.85? That was the last time that these takeovers were so big. And what the article was about was on Bloomberg, and it specifically was saying that, hey, listen, these oil companies, when they do these deals, like the one that was done yesterday, last time this happened, let's put it that way, they were within 3 weeks of the lows. That's when Exxon took over. It'd be interesting to see how that plays out. You know what I mean?
That's when ExxonMobil came together, isn't it?
Yeah, exactly.
Yeah,
exactly.
Well, we'll see. You know what? We'll see. I think, like I said before, oil, to me, it's, everyone is still like living in the June through January period, and kind of, it's like a aftershock. The thing hasn't done a hell of a lot since January. It's just trading back and forth. I think this is going to continue. This market is too balanced. The bullish and bearish arguments and the forces in the market are very balanced here at around $50. So I'm not surprised to see it sitting here.
Yeah.
I really am not. And, hey, it's good consolidation. It's not only consolidation in terms of price, consolidation in terms of the whole industry, whether you're going to look at refining or you're going to look at production or you're going to look at drillers and equipment. I saw that the drillers and equipment stocks have done a little bit better today. Stocks like Schlumberger and Halliburton, all of these kind of equipment, these things need a relief rally.
Yeah, well, and just and on the other side of that, Terrestos of the world and Valeros want lower price. So
well, absolutely, but they want lower crack spread. They're reflecting. Listen, I've said it 1,000 times. The crack spread is the real-time indicator for profit margins for those.
Crackers are us.
Exactly. That is what you got to watch if you're in those stocks. And hey, at $31, they were, those stocks were at 52-week highs. No surprise they've come off now that it's 25% lower.
No doubt. Hey, listen, man, thank you so much. We look forward to the show in an hour and 15 minutes.
Have a good one, Tom.
Okay, man, thanks so much. That's Andy Heck, folks, and you stay right here after I'm off at 5 o'clock. Andy's going to be coming up 5 to 6. We'll come right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow up 54, Nasdaq's up 20, S&Ps are up 7.5. And as you come over to our website, folks, at TFNN, what you're going to see in the very front, in the carousel, there is the foundation of options trading. I'm going to be doing a hour-and-a-half webinar. That's going to be a week from last night, 5 to 6:30 at night. If you want to understand options upside down, folks, check it out. We're going to be talking about where you should be getting in, bull call spreads, bear put spreads. Bottom line, hour-and-a-half, great education. It's only $97. You can check it out on the front page of TFNN. And what you will get, if you can't make it live, folks, it will be on your page for a full 30 days. Some of the Dow stocks out here. So, well, first off, let's go look inside the Dow Industrial, see what's moving the Dow. We're up 53 points right now. The biggest mover inside the Dow is a dead cat bounce, and that's GE. GE's up 74 cents. And what that's all about, folks, GE just keeps shedding assets. GE's more than likely going to announce a deal tomorrow between Blackstone and Wells Fargo. They're going to sell $30 billion worth of real estate. They've basically been weaning themselves out of the financial business, because the bottom line is that GE, right from the leading up to the 2008 crash, GE was more of a financial company than an industrial conglomerate. It looks like they want to go back to being an industrial conglomerate. GE's the mover inside the Dow out here. Johnson & Johnson is the second mover. That's up $1.27. You get Goldman Sachs up $2.35, and Pfizer's up $39. Putting pressure on the Dow Industrials. You get Home Depot down 87 cents. Big Mac, McDonald's is off 28. Verizon is flat. And you get Nike down 18 cents. Inside the NDX 100, what do we have inside the NDX 100? The mover inside the NDX 100 is Wynn Resorts. That's up $7.51, trading at 136. You got Walgreens is up 497. That's a big number. Express Scripts is up 414, and Altera is up 131. The Altera trade out here today is pretty amazing. So David Faber came out this morning, folks, on CNBC and says that there's no more talks. There's no more talks that are being had with Altera and Intel. They haven't talked in a week. That's exactly what he said. Bottom line, what that did, that had Altera opened up about $6 down. It opened up at $38.97, and guess what? It just was on a tear coming back from that price point. Okay, so taken away from and so you can see this is quite a lineup of how this is going to shake out too, because it has juice in the move. You know, Altera on the 27th of March went from $34 to $45 when the market was open, mind you. Then they closed it, they opened it back up, Bottom line is that you spike lower today. The high of Altera today is 44.18. The actual high is 45. So Altera still has some real juice underneath it. Now, taken away from the NDX 100, you get Bed Bath & Beyond. That's down $4.22. You get, let's see. Costco is off $3.19. We got to pull both of those up. And American Airlines is down 86. BBBY. Let's see what's happening with Bed Bath & Beyond. BBBY. There she is. So Bed Bath & Beyond right now. Okay, so she's going, this is clean, if you want, it's amazing. So Bed Bath & Beyond going right back to January 9th, okay? So watch what this had done. January 10th, Bed Bath & Beyond was at $78. It gaps lower on the 11th. It goes to, the 9th. So on the 8th, it was $78. On the 9th, it was $72. High volume spike low. Now watch what it does. Gets to a little bit lower, gets down at 71, then climbs all the way back up, almost hit the high, hit 79. Yesterday, you're at 77. Where's it going? Guess what? You're going to that high volume swing point. Now you're going to this high volume swing point, and the volume's too high. You're going into 11 million shares. It's done 8 million. You haven't hit the low yet, which is the 72.38. You hit 72.68, and that's about as dangerous as you can get. Bottom line, this is going to blow this out. And then what is it going to do? Yeah, guess what? We have the October 15th swing point that's hanging out there still. That October 15th swing point, folks, is just notorious. It's out there in spades. Let's go to Costco and see what's happening with Costco. Costco is down $3.13. Not that that's a lot either. We're talking about a $148 stock. So Costco's in good shape. Would you have a Costco? Costco had broken topside February 3rd, February 2nd and 3rd. No, 3rd and 4th with volume. You're backing down with lighter volume. You're backing down with 3 million shares. You're going into 10 million. This is just an equity that has gone dramatically higher. And it looks like if I put this on a monthly, let's see here. So put this on a monthly, see what we come up with. Well, this has been a one-way road. $37 to $190. Well, as long as it holds like 142, it's going to be all right. You don't want to see this breaking below 142. Breaks below 142, there could be some problems in paradise there for Costco. Right now, it doesn't look like that's going to happen, but that's important to wrap your head around. The SPG, let's go take a look at SPG. Commercial real estate out here is getting hit today, folks, okay? And what that's all about, of course, is that the rate structure. SPG down $4.29 with some volume here. We're trading out at 193.15. The high is 206, and we'll see. You're coming into a swing point with 1 point. Let's see, that swing is 191.63, and thus far we've hit the 192.49. That's also dangerous. It's always dangerous when you thunder down, you stop right before the lowest swing point, and the market closes. It has all night long to basically build up some cause, get some energy, wake up in the morning, bang. And then the correlation, of course, has to do with what people want to buy, what the people want to sell, the amount of energy that's been built up. But when you wake up, man, it's not good waking up right next to a swing point. This is Tom O'Brien. This is TFNN, unless that swing point's going topside. That's a beautiful thing. Dow right now is up 59. Nasdaq's up 23. S&Ps are up 8.5. And we're at 2084.57. It looks like it's going to finally make the 2082 on the S&P, getting up and over that. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You had too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's kick into a nice weekend, too. This is a unknown writer. If you believe in yourself, so will others. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 56, NASDAQ up 23, S&P's up 8, gold contract down $8.50, trading at $1,194 an ounce. Silver down 30 cents at $16.15 an ounce. Platinum off $9 at $1,156 an ounce. Copper flat at $2.72 a pound. Light sweet crude up 31 cents at $50.73 a barrel. Bonds, we had the 10-year down a half a point at 128.27. 30-year off 1 point and 23 ticks, almost 2 points at 163.07. King dollar up 1,169 ticks at 99.30. Looks like it's going to go after its high once again. Euro down 126 at 106.55. And the yen up 51, trading at 120.64. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? If we go over to the world of the S&Ps, we take a look at the SPY, what you're going to see is this. In 5 days, it was trying to make it over the price point of 208.61. You did it out here today. We've done 82 million shares. Now, with this says game now is into the top of the downdraft. Now, the downdraft, you have two separate downdrafts, folks. Your benchmark is March 6th. March 6th, that's where the first downdraft came in. We came down with 188 million shares. The high, and I'm not talking, that's not the high of the market, but it's the high of the downdraft. That's where we barrel down. So the high of that level is 209.94. So it's up another point. That's your first downdraft. Your second one was generated on the 25th. That's 209.35. We barreled down that day with 159 million shares. So the first one came down on the March 6th with 188. The second one came down with 159. We closed over all the highs, even intraday highs of the last 7 days. That's saying you're going to go after the 209.35. I suspect you're going to see that tomorrow. Now, the volume's light, but bottom line wants to go after it. NDX 100, the 3 Qs. What do we have with the 3 Qs? 3 Qs got a little jump on everything yesterday. 3 Qs had got into the swing that it was trying to get over. That was 106.82. That swing that was generated on the 30th of March. We did 22 million shares today. The 3 Qs are going into 41 million. So, number one, it's over the swing. That swing point being 106.82. That means it can go to the top of the downdraft, which is 108.20. Volume, yeah, it's just about half the volume, which is pretty amazing. But that's what you have. No one's in the store. People are buying the product. Going into a Friday, that means it's going to go test it up there. Small caps. We look at the Russell 2000. Dealing with the small caps, this is what you have with the small caps. Small caps closed out at 125.02. This was just a sideways move in the small caps. but the high of the downdraft is 125.60. We hit 125.73 today. That downdraft had 42 million shares. We did it with 22 million. So you're shot by 20 million. It being coming into a Friday, I suspect you'll probably get one more test of that area. Gold contract. What do we have with gold? Gold contract out here is trading at a price point of $11.94. We did 104,000 contracts. That 104,000 contracts, folks, is coming into the huge sign of strength that we had on the first, where we had 100 and... Was it the first? 1 second. Yeah, it was the first. 151,000 contracts. So what I expect you're going to see is this. You're coming into a Friday. Fridays are nasty in the gold market when you're pulling down, no doubt. So we're at 1194. I suspect, yeah, it can go after this at 1180. You know, we'll see whether we get the volume. Thus far, what we have is this, is that off the bottom, gold is up 88 bucks. You pull back $40. That's a normal occurrence coming off bottoms. That's the bottom line. Gold went from 1142 rather, 1142 March 17th, all the way up to 1224. You pull back $40 right now, intraday. It's not even $40 in general. But bottom line, I do expect it's going to basically have some pressure tomorrow. We'll see whether the pressure comes along with volume. Thus far, the gold market is still saying it wants 1320. That's how this thing is set up right now. Bonds. We go take a look at the bond market. If we go to the TLT, what we're going to be looking at in the TLT is this. Now, the TLT, folks, is the 20-year bond plus fund. That pullback today, we pulled back $1.70. We're trading at 129.43. You're pulling back into a monster. You're pulling back into 13 million shares, and you've done that with 6.4. So bonds still want higher price. That's how this is set up. When I say bonds, folks, I'm talking specifically, we're talking about treasuries here, okay? Because I want to, when we come back on the first break, I'm going to talk a bit about some of the bond funds, meaning the high yield funds. Because if you're in one of those funds, we want to walk you through how these work, because it's crucial for you really to understand the liquidity inside an ETF versus how the actual asset inside the ETF trades. And in most cases, those babies trade. If you buy the Qs, great. You can buy all the stocks in the Qs in a heartbeat. The sponsor can. The bonds are not the same, and I'm going to walk you through that, because if you're in those, you really want to understand so you don't get smacked in the head inside that bond market when, in fact, everyone wants out the door. Okay, King Dollar. What do we have with King Dollar? King Dollar today was up 1,200 ticks. King Dollar has done, she's going to need more volume, but she's got the price going with her, so King Dollar is going to go after this high. She did 52,000 contracts. Now, 52,000 is going against 100,000, but she got the price going with her. She got over the swing point of 99, did that with volume, so that's saying it's game right to the highs. The supply line is pretty intense at the 100.12 level. You know, we had come down on the 18th with 100,000. On the 19th, we did 96,000. And on the 20th, we did 87,000. So that's a big supply line. That top of the swing on the first downdraft was 100.12. And, you know, you're right. Well, you're 800 ticks away from that right now. We hit 99.415 intraday out here today. What I do expect you to see is that it's going to make that run. Now, we go back to the metals market for a second. You go into silver. What you're going to see with silver is this. Now, silver is weaker than gold. Silver has come back into its swing point. It has lighter volume. Price-wise, though, it looks like silver silver's more volatile than gold in a big way. If gold's up 2%, silver's up 4%. If gold's down 2%, silver's down 4%. What you have with silver out here today is this. You're trading at $16.13. The low of the sign of strength is $16.08. We got down to $16.10. The difference in silver and gold is that the volume did expand today in the silver market. Not as big as it went up. We did 43,000 contracts versus 60,000. And yesterday we had done 48,000. So it contracted somewhat. Bottom line, we'll see how it handles the $16.08. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 56, NASDAQ up 23, S&P's up 9.5, gold down 870, silver off 31 cents, and bonds. The 10-year is down 16 at 128.27, 30 years down 1.25 at 163.05. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 56. You had the NASDAQ up at 23. S&Ps are up 9.5. And as we do each and every Thursday at 20 past the second hour, we have our man, Mr. Basil Chapman. Don't forget, folks, every trading day, 11 to 12 Eastern Standard Time, Basil is a great program right here at TFNN. You can get it right on your cell phone, tfnn.mobi for the audio. You want to get Tiger TV, just go to tfnn.com on your mobile device. Bottom line, it pulls it right up. We'll know what kind of device you're on. Send you down a great transmission. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. How you doing?
Doing well, thank you.
And
I'll be doing a lot better when we start to get temperatures closer to your level than New Hampshire's level.
So what is it like up there right now?
It's actually very cold outside.
That's crazy, man.
The second week of April. It's ridiculous.
It's April 9th, man.
I know. I wish the weather report.
Like very cold. Does that mean that it's like 50?
No. It's in the 30s or something like that.
Oh, my God.
They're having snow, I think, in New Hampshire.
Good old Bud Ross. He's having snow with his triplets. I like it.
That's good.
We love you, Bud. Okay, so what are we looking at? Am I looking at the Dow?
Yep, we've got the Dow right here. The daily Dow is what I show my subscribers in my opening call every single morning. And I show
You don't have one of those stocks, do you? I'm going to shoot it if you do.
No, this is not
I'm only kidding.
But I tell you what is fascinating, that you can actually see it now because of the action today. You see there's a soft, what I call a soft W, that's like two formations right there. And there was a fight, there's been a fighting up until 2-3 days ago. Basically, there was a fight between the arch formation on the left, I'm showing it there, they're going to the high of the 2nd of March, at Dow 18,288, down to the low of the 12th of March at 17,620. Then it made another arch formation, failed underneath the previous high. You can see the technicals were very poor. The MACD and the stochastic were failing. But the price only went down slightly low. It went down to 17,579. So it was very important the last couple of days watching this to see whether or not the Dow started to close underneath that purple line, that 9-period exponential moving average. And yet, at the end of the day, there was enough buying to push it quite. It's not a bad candle. It's not a great candle.
Yeah, it's the third day over it, isn't it? Yeah.
And there you are. So actually, it's the 4th day over it. And what it says is that you've turned the 17,872 level into a very important support. Then I wanted to talk about the arch formation has been fighting the cup formation. And the second cup formation, because of today's action, it didn't look like it earlier in the day, but because of the close, ended up quite good. Not great. Now, yes, this is something I'm going to have to study over the next couple of days, because I was asked about it, and I've gone into it a little bit in my newsletter, but I think I need to go into a little bit deeper. The volatility index plummeted today, minus 6%, down 89 cents to 13.09. Now, when we've seen that kind of decline, almost a point, you would not expect that the Dow would only be up 5 and that the S&P would be up 9. It really, I would have suspected if you said to me, oh, the VIX was down 89 cents to 13.09, besides being underneath the 14s, I would have said, wow, the market must have been up about 120 in the Dow and must have been about 13.50 or something like that in the S&P. So what's very important here is that the I call that buying intensity of the volatility index. That's a little different to Richard Arm's original. I'm sorry, I was going to talk about the TRIN index, but I won't. I'll stick with the VIX. The VIX index at this particular point should be showing buying pressure, and the buying pressure that you can see right there on the left side is the daily chart, middle is the weekly chart, on the right is the monthly. For me, I would have said that the Dow was very close to all-time highs. So what is the selling pressure that has just been stuck in this very narrow range? Let's go back to this chart. Just been stuck in the very narrow range, hasn't even broken out above the high of the 23rd of March. So I think it's part of what you and I have been discussing for a while. It seems to me that there's a rotation going on, that some of the very best sectors, like the biotechs, which have come down very sharply, had a nice bounce, but still way off the highs. And another sector that's had a fantastic move is the XLV, and that XLV is the healthcare ETF. It's the S&P Select Healthcare Spider Fund. It's pulled back very sharply from the 76.01 high. That was a peak G in the daily and a D in the weekly, and a possible E in the monthly. And that says to me that there must be money coming out of some of the favored sectors. New money must be finding a home, and they're rotating to whatever they think is moving, but there's nothing that's got traction yet. So I don't see leadership per se. And if you even go to my Dow stocks, GE did have a good day, but I believe it's because they sold part of the realty sector. IBM is just kind of stuck. It's okay, but it's not looking great. Triple M, which has been a leader for a long time, is holding near the highs, but it hasn't broken to a new all-time high. And United Technologies is really just stuck down here. So I think I'm right in saying that there's a rotation going on. The rotation is very selective. There are just a couple of stocks that are already moving the market higher. But fund managers, maybe it's money coming in because of tax season, fund managers are putting money to work. And I think that's the reason why the VIX index is showing some weakness, and that the corollary is that it's showing buying power, but that buying power isn't being related yet to the price of the different indices. The only one that's done really well is the IWM, which is the small cap, which in a way, you were talking about the dollar just now. Well, in some sense, the IWM, the iShares Russell 2000 ETF, is basically the small caps, so they aren't really that oil related, they're not really that dollar related. So I think that that's a little bit independent, but they also have not, even with the VIX showing such buying intensity, they haven't gone yet to a new all-time high.
Well, the VIX, okay, so the VIX is based on the amount of premium for the first and second, or as you get closer to the option expiration. Then second or third, strike prices.
Yes.
So that's really saying that the option market makers are not paranoid, and they're selling they're basically putting no premium into these.
And it could also be that it is being looked at as a different instrument right now to what I normally consider to be buying pressure. And that's what I have. That's the kind of work I want to do over the next 2 days, to see if I'm missing something, or if this is, I like to think of like wheel spinning. When you're on the sand, you put your foot down the accelerator, the wheel spins, you really go nowhere, but there's a lot of torque, a lot of force, but you haven't gone anywhere. That's what we've got to be real careful of, because if in fact we're seeing that, it means that when the buying pressure stops, then you've got a vortex. You haven't got that safety net. So that's really what I want to be looking at, because at this particular point, I'm not really seeing leadership. I'm seeing specific stocks in the NASDAQ that are doing well, and maybe in the Dow, but nothing, there's no sector that's really leading.
Listen, folks, come over to our website at TFNN, go into newsletters, trading newsletters. You can see the opening call right there. You can test drive Basil's newsletter 1 month, absolutely free, right here, right now, and you can hear him tomorrow morning, 11 o'clock. Basil, thank you so much, man. Have a great night, safe night, and we got to send some warm weather up there, man.
Please, I'd appreciate it.
Okay.
Thanks. Have a great night, Tom.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Okay, so we're going to talk about high-yielding bond fund ETFs. So if you're in these, folks, okay, I want you to wrap your head around this for a second, because this is crucial, absolutely crucial to understand how these things work. In life, it's really easy to buy anything. It's always selling it, okay? In the markets, it's even more crucial to understand liquidity, and liquidity just means you can get in and get out without getting killed. What has happened inside the ETF structures is that they've got very good. When things are going great, it's not a problem. When people want out of the market, it is a huge problem, okay? So depending on how long you've been in the markets or listening to me, the first time that this came down the pike in a huge way was going all the way back to 2000. I had the president of the American Stock Exchange on the first day that the Qs actually traded, okay? So they were that new. I remember when iShares first started and all of this, okay? But I'm going to fast forward on this because it's crucial to understand this bond market. But I'm going to start with the Qs. So when the market crashed in 2000, what had happened, and this shocked people, pros in particular, okay, was that as everyone was buying, you, me, and the whole world were buying the Qs, the Qs and the SPYs, and the diamonds were there too at the same time. As we're buying them, that is a very simple formula. If you buy the Qs, the sponsor of the Qs has to buy the NDX 100, which is all the 100 stocks in the weighting structure, right? So they can keep that basically real even all day long, okay? They buy it, everything is liquid in there. When the crash came in 2000, as everyone was getting out the door, the market did go down that quick, and, you know, the NASDAQ got croaked. NASDAQ went down 35% in all of, like, what, a month and a half? Bottom line, what that was about was that that was the chicken and egg deal, okay? Someone sells the Qs, they got to sell 100 stocks. Someone sells one of the stocks in there, they got to sell the Qs, okay? So you follow me. But guess what? Everyone could get out. They got smoked, but they get out. Okay. Now, we go from 2000 to 2015. And the ETF structures run the markets now, big time. And it's going to get heavier. So you really want to wrap your head around how these work. Most of them out there, you know, bottom line, if markets go down, you know, the elevator is always fast on the way up. But most of them out there, you still can get out and you're not going to get killed. You're not going to, you know, wake up in the morning and the market is only down 5% and your ETF won't be down 20%. But guess what? Inside the high-yield junk ETF, this can happen. Now, because I want to walk you through how this works. So if we take HGY, if you take JNK, those are the two biggest ones out there, okay? One of them is the Barclays, one of them is the iShare, right? Now, when you're buying and or selling those, and it's an even market, that's no problem, okay? So the HYG did 3.4 million shares today, and this is a nice liquidity in it, no doubt. It's done 13 million shares, 9 million shares, 4 million shares. Good volume, period, okay? If we go take a look at the JNK, same type of setup. That did 5.7 million shares today. Bottom line has 6 million, 5 million, 11 million, okay? So all that works, and it works really well. This is where the problem comes in. The underlying structure inside that's ALL, all those high-yield bond ETFs goes like this. When you and I can buy or sell that through the fund in a blink of a button, no problem. When everyone wants to get out of the market, okay, it is a huge problem, and this is why. The sponsor of the ETF is only going to stay in and guarantee, not necessarily guarantee those prices, but stay in front of those prices as long as they have the product to back it up. Okay, so now let's go to the point, and this is how I actually got into this business. I was doing this in the 80s, and I was doing it with junk bonds. What happens is that when you're in the junk bond market, folks, is that each trade sometimes takes 2 or 3 months. You can actually have the trade done, and it's the product itself still takes 6 or 7 weeks in this market. In this market. That's how crazy this is, okay? So what is that called? It's a mismatched asset. So what ends up happening is this. For you and I inside the ETF structure, you can buy or sell them. Where the problem comes down is that when you get fast moves on the downward side, inside these ETFs, these high-yield ETFs, you have 2 different things. You have high-yielding securities, and you have high-yielding loans. That's kind of how that works, okay? Each one of those, when you're actually physically trading them, they do not take a day, or 2 days, or 3 days to close them out. It's a couple weeks. So what does that mean? Well, if I've learned anything inside, not just the market, in general, if you have a mismatched asset, you are in monster trouble. And a mismatched asset in the disaster of 2008 was the collateralized loans. What was happening there is that there's plenty of banks that had something they had to pay out right now, and guess what? They didn't have the money because the money was long-term money. They were basically, it was a mismatched asset. That's one of the worst things that you can do for your financial health ever, okay? Bottom line, you want to understand how they work, just Google it, okay? Google, number one, what a mismatched asset is. Google how either a high-yield bond or a high-yield collateralized loan, how long it actually takes, and spend a half hour there so you can really understand what's going on. And the reason this got brought up, because you had Jamie Dimon out there today saying that he's worried about liquidity in the marketplace, in the bond market in particular. My take on that, yeah, he wants more liquidity. He wants to be able to leverage J.P. Morgan to the hilt, and now he can't anymore. That got me thinking somewhat just about the aspect of not the treasuries, because he was bringing up that the treasuries were like that. That the bottom line is that, you want to buy 5 million of treasuries. Bottom line is not easy to do. You can buy 5 million of treasuries in about a heartbeat, folks, okay? In a heartbeat, okay? Each and every, so if you just want to wrap your head around this for a second, what's amazing? What's amazing to me when people say that, it blows my mind, because the fact of the matter is, evidently, there's not as many people that trade treasuries as I think, because each and every contract you buy of treasuries is 100,000. So you buy 10 contracts, that's $1 million. You can do a click of a button all day long with 50 or 100 contracts in treasuries, and you get them out to the 4th decimal. Okay, so the bottom line is that that's not it. But what it is that inside that high yield market, whole different ballgame. So if you own something like that, beware, number one, and what you want to absolutely make sure you do, I wouldn't own it. That's the real bottom line. Because what you have, the last time, see, the illiquidity, I'm looking at this, that was 08. 08, you went from 41, is this a monthly? Yeah, you went from, well, everything went like that. But you went from 41 down to 29 in a heartbeat. And this, of course, you're hoping you don't lose your money. Bottom line is it's not worth the, well, let me see exactly what they pay. This one here, if you're looking at the JNK right now is paying, she is outstanding, 7 point, I have an hard time finding it. Let's see. Well, this gets interesting too. So, because the JNK has an expense ratio of 0.4%, it looks like let me see the underlying asset. The underlying assets that they have in there, 3.3%. It's about 3.3%. Yeah, the return's 3.3%. 3.35. You're taking a risk of principal in a huge way for a maximum return of 3.35. That's in the JNK. HYG, take a look at the HYG. That's the iShares high yield. that one there, that's yielding 5.3%. So that's the high yield at 5.3%, and all that's going to do, though, bottom line, let me see what what they're paying on that. So you're paying 0.5% per year on that. It's you're paying 0.5% per year on that, and it's yielding a lot more. There's no doubt. That's yielding 5.37%. But you want to understand at the same time, you can lose the principal in about a heartbeat there. And you don't want to be buying bonds and to lose principal, folks. That's not why you buy bonds. You buy bonds that you know your principal is secure and you get an interest rate structure. It's something paid off. This is Tom O'Brien. This is TFNN. You stay right there, folks. And don't forget, you want to know about options? Check out the front page of TFNN. I'm doing an option workshop next Wednesday night, 5 to 6:30. It's only $97. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Folks, and don't forget, right after my program tonight, we got our man, Mr. Andy Heck. He's going to be growling and prowling with you for 1 full hour. Great program. Now, as you're over at TFNN, folks, so you're going to see right in the carousel, I am doing a workshop. That's going to be next Wednesday night from 5 to 6:30. What that's all going to be about is the foundations of option trading. It's only $97. Great workshop. Check it out when you're there. Now, as you're over at TFNN also, if you happen to be in the CD market and you're looking for a secured investment and something that you don't need that cash for a full 4 years, you know, you've heard this promotion many times. It's the Tiger Real Estate First Mortgage Program. And the way this works, the First Mortgage Program, you know, we have the Tiger Real Estate Investment Fund. We own a lot of properties. We're putting first mortgages on a few of them. As you hit the Tiger Real Estate Opportunity Fund banner on the right-hand side, you can go into the first mortgage portfolio. And when you hit that portfolio, what you're going to see is that you're going to see there's, let's see, 4, 8, 12, there's 14 houses that are up there, and there's 4 that we're looking to get a first mortgage on. When you take a look at those houses, what you'll see is this. When you pull the house up, you're going to see the house number 1, and we've done all of these over, meaning full gut jobs. They're leased out. They're fully leased out. What you'll see is that you'll see the actual rental income, and a few of these are just over the top. They're all great, but a few of them where we really got them at a great price. Bottom line is that you know, they're cash flowing in an incredible way. The first one I just pulled up here, this house is appraised at $117,000. Now the mind blower of this, it's appraised at $117,000, but yet it takes in $21,000 in rental income. Why? Well, because it's in a good spot, and this neighborhood in St. Pete is getting fully gentrified. You know, when this got appraised, it got appraised about 3 months ago. This house was probably worth about $150 right now. But the bottom line, it's appraised at $117,000. We're looking for a first mortgage. We go for 70% of the appraised value. So in this particular case, 70% of that appraised value is $81,900. The rental income that we get is $21,000. The taxes we pay, the city, is $1,600. The insurance we pay is $1,766, and then we include the investor payout. The investor payout, if you had $81,900 in the CD market, you wanted to make more than the CD. If you wanted to make 5% on your money annually, that's paid monthly, your investor payout would be $4,095. Now, after all the bills, we still have another $13,500. It's a great program if you have money that you can tie up for 4 years. Realistically, these will be sold probably in the 3rd year. If we sell them between now and 18 months, you will get paid the full 18 months interest. So let's say, I don't plan on doing this, okay, but let's just say a year from now, the inflation goes to the moon, everything is like really up big. It's like, okay, man, let's get out right now. Bottom line, what would end up happening, if we sold the property, even in a year, you get an additional 6 months interest. You're guaranteed 18 months interest at the 5% no matter what happens. as you go over there and check it out on the front page of Tiger Real Estate Opportunity Fund, what you'll also see is this. You go to sample closing documents. And inside the sample closing documents, you're going to see the actual documents that you'd receive, meaning the promissory note, the mortgage note, the HUD example of all the expenses. In this case, the fund is picking up all the expenses. You have 0 expenses. And then what you'll also see is the loan policy for the title insurance. The title insurance, folks, we already have title insurance on these. The title insurance that I'm referring to is that ensures we are paying for the title insurance that ensures that you have the first mortgage and there's not another mortgage on that property. And the fact of the matter is, of course, we're only getting 70% of the value. So secured investment, pays monthly, nice deal. So check it out if, in fact, you're in that market. There's a lot of people that are in that market. If you have a CD that you're turning over, if you want to diversify out of the marketplace and, basically get a monthly check, it's not a bad way to go. Okay, S&Ps, what do we have? Okay, we're coming into Friday. Well, first let's do the gold market because we're coming into a Friday in the gold market. Coming into a Friday in the gold market is always challenging, okay? It's particularly challenging when the dollar goes up 1,200 ticks. So what do we have out here? Well, in the gold market, what you have is this. We are trading at 1194. I suspect the lows of the day of strength will get challenged tomorrow, but this is strong. Right now, you have price destruction going. You're at 100,000 contracts. It needs about 150,000. Price-wise, it really hasn't pulled back that much. We went, coming off the bottom, we went from 1142 up to 1224. So bottom line is that we went up $88 and you pull back 40. It's not the end of the world. So we'll see how that challenges that tomorrow. It will challenge it. That's the bottom line. It's going to challenge it. We'll see whether it can break it and break it down. When you look at the GLD, which is the Street Tax Trust, it's saying that, guess what? This thing wants a lot higher price. The GLD, there's no sellers in. There's the GLD today, we only did 4.7 million, and you're going into 12.4 million. So that's pretty amazing. That's going to take a lot more to get it to lower price. In both cases, when we came off the bottom on March 18th and we followed through again on April 1st, that is saying that it wants to go to the swing highs of the 23rd of January. That 23rd of January, when we're talking gold, you're talking a 1300 print out here, 1309. So this is going to be wild watching this whole baby shake out. And don't forget, no matter where you're listening right now, folks, you can get all the program at TFNN right on your cell phone. It's tfnn.mobi. You can also get Tiger TV. The way you get Tiger TV, you go to tfnn.com. On the right-hand side, you're going to see a little box that will say mobile devices. You hit that device, Tiger TV will come out right on your cell phone with the audio, with the video. And we really appreciate you growling and prowling with us out here because these numbers are going up really nice for us. And, you can see how things are going digital. And they're going digital, and they're going digital very quickly. You stay right there. Our man, Mr. Andy Heck's going to be coming up, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right there. Our man, Andy Heck's coming right up. Go get him, folks.